You pay your insurance every month on time. You think it's a safety net that's built for you. Then a hailstorm hit or you get a fender bender, anything that happens, you file a claim because that's the whole point that you need to do, and the bill comes. And it's not just only higher, it has skyrocketed. That one small incident just turned you into a multi-year financial penalty. If you have ever wondered why the loyalty gets rewarded with a massive price hike, believe me, you're not alone. And that is the reason behind that is much colder and more calculated than you think. Today, we're going to look into the exact formula the insurance companies use to justify this hike. We'll break down why one claim can follow you for multiple years, and more importantly, how to fight back. Stick around. First, let's get one thing straight about how insurance really works. You think that you're paying for a service, like we all do. They think this is a game of statistics. For years, you're paying them and you're not filing anything, which is great. To them, you're a perfect customer. You are a good risk and pure profit. The second you file a claim, that changes everything. Instantly, you're not a person anymore. You're a liability and a data point, which is a proven risk. The algorithm actually flips the switch and they're no longer cashing your checks anymore. They're pricing the fact that you might actually cost them money again. That claim is not just a transaction. In fact, it is a signal, and it told them that you're willing to use the services that you pay for. In their world, that makes you expensive liability. Let's understand the different parts of the secret insurance formula first. First is the cardinal sin, the at-fault accident. If the accident is your fault, you have just raised the biggest red flag possible in the insurance industry. To them, the fault is equal to future risk, period. There is nothing more to say about that. You just at fault accident, your rate can jump on average to 40 to 50%. So if your annual premium is, let's say, $2,000, be prepared for it to get closer to $3,000. That's how they price you with the new risk profile that you have created because of that at fault. Second is the one that completely doesn't make sense to me. This is not at fault comprehensive claim. Let's say a tree falls down in your car and someone hits you. It's not your fault, right? Not exactly. You can still be into a group where the rate goes up. Studies, in fact, have shown that for not at fault accident, your premiums can rise about an average of 10%. Why? Because being involved in any accident makes you statistically more likely to be in future accident. So filing for a comprehensive claim for theft also can signal that you park in a high-risk area. On top of that, many of them give you a claims-free discount. You file any claim and poof, that discount is gone. Your rate goes up without even calling a rate hike. Third, permanent insurance record. You have it. It's called a CLUE report, which stands for Comprehensive Loss of Underwriting Exchange. Just like you have a credit report, you have a CLUE report as well. Every home and auto claim that you file is logged into this CLUE report, and it stays there up to 7 years, similar to a bankruptcy on your credit. So when it's the time to renew and get a new quote from a competitor, they all look at it. So a recent claim is blinking red light on that report and tells every insurer that you are a big risk. Finally, there's claim severity. This is very simple to understand. The bigger the payout, the bigger the hike. So let's say if you file a $1,500 claim, it's not going to have the same impact as a $30,000 claim. The goal for the insurance company is to get that money back from you and then some more. So let's look at a specific example to understand this a little bit better. So let's say if we have David. David is a very careful driver. He has a clean record and he pays $1,800 per year for the insurance. One day, minor accident, it's a speed collision, and it is actually his fault. The damage is $4,000 and his deductible is $500. So he does what he thinks he's supposed to do, right? He files a claim. His insurance pays out $3,500 and he gets his car fixed. Then his renewal notices come up. His new premium is $2,610, which is a 45% increase, right in the line of national average. So here's the brutal math behind that. That's an extra $810 per year. That surcharge will stick around for at least 3 years. So over the 3 years, David will be paying extra $2,430 in premium. The insurance company paid out $3,500 for the claim, and by the time he's done paying for it, he's handed a huge chunk of what right back to them. It wasn't a one-time event. It was a trigger for a long-term financial reevaluation of his profile. So fight is pain lasts so long? Why 3 to 5 years? It's not a random number. This is an industry official observation window. Basically, it's your probation period. From their side, one claim might be a fluke, or it could be a start of a pattern. So this 3 to 5 year window is how they find it out. So if you stay clean, your risk score in the algorithm slowly drops. As the incident gets older, it fades, and you can get back to your original rate eventually. This time frame is directly tied to your clue report. As long as the claim is recent, it's the main thing that they would really care about. In that time, you're in the probation period. And if you file another claim in that probation window, that's when your risk massive hikes. Or they might just decide that you're completely uninsurable and drop you completely from their books. So you've heard about the problems. Let's talk about how do you fight back. So are you just supposed to just take it whatever the insurance company does for you? No. This is how you play their game. First, do the math before you file the claim. For small stuff, get a quote from a mechanic first. If the repair is just a bit more than your deductible, it is almost cheaper to pay it yourself. The longer term hike is where they're going to get you. Second, ask about accident forgiveness. It actually exists. Insurers like Nationwide, Progressive, Geico, they all have it. It might cost you a little bit extra on top of what you're already paying, or it might be considered as a part of the loyalty reward. But basically, it is get out of the jail free card for you, which is first at-fault accident that occurs. It can save you thousands of dollars over the lifetime of your insurance. You already have it in your insurance. If not, see if you can get it. Third, and this is the best weapon you can use, is shop around. Loyalty to an insurance provider is not going to pay you. Your current insurance already has decided that you're a bigger risk because of that at-fault accident. Their competitor might see it differently. Make them compete on the rate. After a rate hike, immediately start getting quotes from other companies. Finally, dispute the fault. If an accident was not your fault, don't just accept it as their decision. Fight it. Give them police report. Give them witness info, photos, anything that you can find. And at-fault ruling is what's going to cost you the most. Don't let them pin it on you if it's not your fault. I also want to give you a quick input on the home insurance note. Now, home insurance is a similar game, but its rules are slightly different. It's less about the at-fault incident that happens in the auto insurance industry and more about the claim frequency and the type of claim. A claim, let's say for a water backup or a kitchen fire, can cause a significant jump in your premium rates. On average, a single home claim can raise your premium anywhere from 9 to 20%, which is fairly significant for home insurance. However, a claim for a damage after a major weather event like a hurricane often is not going to hit you hard because it covers the entire region. By filing in multiple small claims within few years is also a huge red flag and can lead to a massive rate hike or even get your policy canceled. So the reason your premium skyrockets after one claim is not personal. It's actually a math. It's a cold-hearted algorithmic math. The moment you file your claim, you flip from being a low-risk asset to a high-risk liability. Your insurance then just adjusts your price over the next 3 to 5 years to cover this new risk. But you're not powerless. By doing the math on a small repair, asking for accident forgiveness, and more importantly, making insurers compete for your money, you can start playing the game on your terms. Because the insurance is a business and you have to be smart to win as a consumer. Now I want to hear from you. We know how frustrating this is. Have you had a company jack up the rates on you after just filing one claim? Share your story below in the comment. What happened? What did you do? As this is going to help the other viewers. And if you found this content useful, like and subscribe so I can provide you continuous content that can help you keep the money in your pocket. And you're seeing the next video on the screen. This is going to help you understand how the credit score really works.